Our conditions still mildly bearish in this bull market overall, seeing a little bit of stability here in the last couple of days. We've got some overhead resistance here on SPY or S&P 500 index SPX. Futures this morning are moving up just slightly, and that's putting us right up into this resistance area on, again, SPX. So we've got some overhead supply areas here. We've got majority bullish at 12 and 2 still on S&P 500, but our internals, which are the number of stocks above the 50-day moving average, have been weakening significantly. We're down to 24. We had been down to that 20 number, and again, that's also an area or approaching an area where there could be some oversold conditions to bounce right here. But you can see these areas, we've been here before. They can certainly go a lot deeper when we get a pretty decent retracement. This is going back a little bit of time here. So that area now has broken through this most recent support range around that 25 area, and we have majority bullish on the trend condition for internals as well. VIX had a pretty nasty day a few days back, and it's given all of that back for the most part. Big move higher, retracement back down again, shifting back to majority bullish again. When VIX is bullish, that's bearish for the market. So we still have a little bit of a bullish tone, even though we've retraced some of that back in, and it just shows how skittish the market could be with any little hiccup in the news. We're seeing some trigger happy selling starting to be really on the cusp right here. Certainly to be aware of at these levels. We know that S&P 500, again, we're at the upper end of this range. We have been working on this overall bull market for a length of time. So we switch this over to that weekly time frame. You can see that we're now getting that expansion of trend that is just going to be tough to create and maintain sustainability. When we have this, you can see that this is the top of that COVID run that we had, and then we had a couple of years ago this retracement. So we're seeing a really wide area on this trend. We're at the upper end of this range, and the probability of it continuing higher without some kind of retracement is just continuing to decline right here, particularly noticing the breadth that's taking place on the market currently. Let's jump over and take a look at a couple of other ideas. Well, let's look at bonds here. We're seeing that as a real concern as we're seeing bonds continuing to slide. This is TLT, and that's just saying that the bond market believes interest rates are going to stay put or higher. The U.S. 10-year Treasury, this is, again, the opposite side of that. So as we're seeing this TLT is not the 10-year, but as we're seeing bonds go down, we're seeing interest rates go up, and we're seeing some momentum building. We've got majority bullish on the one-day time frame for the 10-year Treasury, and that's been continually moving higher here really since September. We'll keep an eye on that if that has any effect moving forward into next year. Let's jump over and look at sectors. Here we've got continued bullishness in technology, consumer, discretionary. Let's see how that one held up. Still a little bit of weakness here on consumer, discretionary, and industrials, about neutral on that trend, 7 and 7. We're seeing energy, a little bit of a bounce here in energy. Now that 60-minute time frame, you can see it. Once we get that extreme area, we're moving from an extreme area of trend or an expansion of trend back to a contraction of trend once we see these compression areas as well. So we're definitely at a range and a support area on energy where we may see some kind of a bounce here. Financials, 8 and 6, and also seeing a little bit of a bounce here. So some of the oversold conditions on a lot of these sectors are starting to stabilize slightly, or at least counter trend back up, getting a little bit of a bounce on the last few days of some of this positive economic news. Let me jump back. Real estate, 14 and 0, majority bearish here on real estate. But again, notice the trend. Once we get into these deep oversold conditions, they just don't last. Doesn't necessarily mean the downtrend is over, but we could get a counter trend rally back up against that downtrend. Utilities, majority bearish, 11 and 3, and basic materials continuing to see it sell off here at majority bearish 14, and a 1 hour time frame also 13 and 1, still having some expansion on that overall trend. If we get consumer staples here as well, and we've got transportation. Really, just a lot of weakness across the board, but we're seeing a little bit of a potential bounce area off of this deep retracement that we're seeing. Let's look at healthcare as well. Let's jump over to USO, which is the ETF for oil. We're seeing that compression of trend on the 1 hour time frame with majority bullish right there. That's a relatively bullish setup where you get a trend crossover and then a compression of that trend within a new uptrend as things are tightening. Keep an eye on USO. That may be setting up. We're still neutral 7 and 7, but we're getting this tight consolidation of a trend on USO, and that could be building some momentum towards the upside here. Gold continuing to show this just a slight bit of weakness here at 234 is 50% retracement support area, and majority bearish still on gold. Also silver matching that overall pattern. A couple stocks to consider today. One, AVXL, nice confirmation bar, increasing volume right here in the momentum zone. Big move yesterday. That's a 30% move as it's working to establish this new trend and then breaking out of some of these most recent highs. The other one that I wanted to take a look at was, let's see, there's some nice looking names in there today, but the one that I wanted to go through, where was that? Come on, it was sitting right. There it is, MRT. Okay, so MRT also similar pattern, nice confirmation, move higher into increasing volume, relatively low price stock at $3, but a nice move there to consider on that pattern. That's what we want to look for. We want to see that uptrend, retracement back in, showing some support, and ultimately continuing that overall advancement of that trend. At least that's the anticipation, utilizing stop losses below the price activity or below the most recent hold price activity, utilizing even the Fibonacci snap tools work great for stop management. That'll do it for today's update. Everyone have a fantastic holiday.